What is the secret history of early Black-owned financial institutions? Imagine a time when Black Americans had no access to traditional banks and had to find their own way to financial independence. That's exactly what happened in the early days of Black-owned financial institutions. After the Civil War, Black communities faced huge barriers to banking and credit. White-controlled banks often refused to serve Black customers or gave them unfair terms. So, Black Americans started creating their own banks to build wealth and support their communities. The first major effort was the Freedmen's Savings and Trust Company, established in 1865 right after emancipation. It was based in Washington, D.C., and had 37 branches across 17 states. Over 67,000 depositors put more than $55 million into this bank. It was a big step because it gave newly freed Black Americans access to formal banking. Sadly, the bank failed in 1870 because of mismanagement and fraud by white officials. They used the bank's money for risky investments, which wiped out many Black depositors' savings. Even after that setback, Black communities kept pushing for financial independence. Between 1888 and 1934, they started 130 for Black-owned banks across the United States. The first was the Savings Bank of the Grand Fountain United Order of True Reformers in Richmond, Virginia, founded in 1888. It was created by a fraternal organization and served as a model for community banking. Not long after, the Capital Savings Bank opened in Washington, D.C., founded by Milton Holland and Leonard Bailey. Within 4 years, it had over $300,000 in deposits. These banks did more than just hold money. They provided loans to Black-owned businesses that white banks refused to serve. They created jobs and trained Black workers for clerical and managerial roles. They became symbols of pride and self-reliance. Maggie Lena Walker was a key figure here. She was the first Black woman to charter a bank. Her St. Luke Penny Savings Bank in Richmond was community-focused and had many women on its board. It showed how banking could serve the whole community. The Greenwood District in Tulsa, Oklahoma, known as Black Wall Street, became famous for its wealth and success. By 1906, it was a thriving Black community with many Black-owned businesses and banks. It proved what Black communities could achieve when they had access to capital. Sadly, in 1921, a race massacre destroyed Greenwood, ending its prosperity. Other towns like Boley in Oklahoma and Durham in North Carolina also built strong Black banking institutions. Boley's Farmers and Merchants Bank was created with community support, and Durham's Mechanics and Farmers Bank, founded in 1907, still exists today. These early banks understood that access to capital was about more than money. It was about freedom, independence, and the ability to grow wealth over generations. By the 1970s, there were over 50 Black-owned banks in the United States. But during the savings and loan crisis in the 1980s and the Great Recession in the late 2000s, many of these banks closed or shrank. Still, their legacy remains clear. When Black communities were shut out of mainstream banking, they built their own institutions. These banks were born out of necessity but kept going because of a shared vision of economic power and self-determination. Understanding this history shows us that access to capital is more than just a financial tool. It's a way to create wealth, support businesses, and build community strength. For anyone starting or growing a Black-owned business today, knowing this story reminds us that financial independence is rooted in community effort, resilience, and a clear vision for the future.